Welcome to Market Matters. I'm Jonathan Gan together with Sulhi Azman. Unfortunately, Nadia is unable to join us today as she's flying high in Japan. So let us kick things off with what happened on Bursa Malaysia today. So it seems that the Fed has chosen to keep interest rates stable, but this doesn't seem to have had a positive in the markets regionally.
Well, indeed, John, the market doesn't seem to react very well. Janet Yellen last week decided not to pull the interest rate triggers, sparking concerns on people, on the guessing game, whether Janet is going to do it on October or whether she's going to do that in December.
So on the local front, of course, Bursa traded down today and the ringgit also followed the same trend. What happened in Bursa today, Max?
Well, today, John, the FBMK LCI closed nearly 30 points lower at 1,639 points, with 526 counters in the red, while 274 counters managed to close higher. Now, when you talk about the Bursa Malaysia, right, according to MIDF research in a report released today, after selling for 20 consecutive weeks, the foreign investors seems to become net buyers in the local market, mopping up nearly 700 million shares, compared with the 17.1 billion ringgit yanked out from the market in the year until September 15.
So I guess they were actually buying on news, and it seems that value cap seems to have spurred foreign funds to
Well, we have
back.
yet to see whether value cap can actually prop up the local equity market. We understand that Prime Minister Najib has given 20 billion ringgit to do so. Now, regionally speaking, I see red in the regional equity market today, with Nikkei closing down 2% following Fed decision not to lift the interest rate, sparking concerns on the global growth. If you look on Wednesday, right, there will be a flash business readings on China and also the Eurozone that will be focus for investors.
Yeah. Exactly.
I mean, if you look on the commodities front, Brent crude and CPO prices were both lifted on reports that US is going to US drilling activities is going to be a bit more slower.
So on to our hot stock of the day, which actually is finally soaring in the right direction. We have AirAsia. The top traded stock it was the top traded stock of today, with some 95 million shares traded, and the counter rose 5.34% to about 1 ringgit and 38. So the thing is, on the news front, AirAsia is in focus because of its
share buyback program, right?
Yes, correct.
Now, I think in the announcement today, AirAsia has said that they are going to buy up to 10% of their share buyback. I guess, John, this is going to be one of their methods to strengthen or to prop up their share price, which has been hammered down by many things.
Yeah, you're right. It's a note of confidence, I feel, from the majority shareholders. So according to the announcement, the rationale for the purchase is actually because it would actually improve the EPS, or earnings per share, of AirAsia. And they think that this will have a positive impact on the market price as we see it translating today as well.
Of course, John, because 2.78 billion shares, share base, and if they're going to buy up to 10%, assuming they are buying them at 1 ringgit theoretical price, that would mean 278 million shares. Now, my question is, John, is the share buybacks good for the investors? Because they are actually, they have enough cash, 1.84 billion ringgit the last time I checked in their coffers, and they could actually do well, in rewarding the investors rather than do share buybacks. What are your thoughts on that?
Well, the thing is that you might argue that there are better ways, but Mohsin Aziz from Maybank, he's an analyst, basically.
The cheerleader.
He's the cheerleader of AirAsia as well. So basically, he's already saying that the stock is actually trading at its cheapest levels in history. And we see that based on all conventional valuation metrics, it's actually the cheapest airline in the world. And he's still bullish on the target price of 2 ringgit and 5 cents for AirAsia. So if it's cheap, why not buy it?
Well, I hear you, John, but the thing is, aviation stocks, right, they are very volatile. They are very sensitive to, bad news. For instance, Malaysia, last year we had 3 unfortunate airline crashes, and one of them involved AirAsia as well. At the same time, you see GMT issuing some report, very damning report, which has brought down the share price down.
Well, I'll grant you that, but a weak ringgit is a good reason to visit Malaysia. And of course, my first choice in a long line of picks is definitely one that has been selected as the world's most affordable airline. I mean, there's no doubt about it. The prospects of the company look good for now, I think.
Yeah, I mean, maybe, you know, I think the earnings as well could be well better, I suppose, in upcoming results.
So to sum up, of course, the three reasons why we think AirAsia matters at this point is that its shares has been hammered down for a short period of time, and we think that it's time to return to the fundamentals. Its shares have been seen on an uptrend since August 27th, and it has risen 27% since then.